Top business stories live from the Sky News City studio. The economic impact of war in the Middle East as experts warn of supply shortages, spikes in the price of oil and a possible third wave of inflation. Here in the UK, food inflation slows to the lowest rate in 15 months. The IMF forecasts another 5 years of high interest rates, downgrading the economy's expected growth. And the pop legend joining a star lineup to help musicians get paid for their work through the power of technology. Good morning, this is a belated Business Live with me, Ian King. We begin today with the ongoing crisis in the Middle East. Gaza is currently under a total blockade, meaning no supplies, including food, water, electricity or fuel, can reach its population of 2 million people. Meanwhile, Sky News has seen a mass build-up of Israeli troops and heavy armour at the border with Gaza. There are fears that other countries may get involved, widening the conflict and its impact on the world economy, as we've seen with the war in Ukraine. Some economists have gone as far as to say a third wave of inflation is looming. However, in the last hour, the IMF's chief economist said it's too soon to speculate.
We obviously are very saddened by the loss of life that we're witnessing, and we're monitoring very carefully the situation in terms of the economic impact it could have on the region and beyond. I think we have to be cautious. I think it's too early to really assess what the impact might be. Of course, we all hope for a rapid de-escalation of the conflict and an end to the violence.
Well, joining me now is George Ligarius, Chief Economist at Mazars. George, morning to you. I mean, you've talked about this third wave of inflation. How does this unfold?
So the first wave of inflation was after the pandemic. Supply chains were in disarray, and that caused the first wave of inflation. The wave we thought was transitory. Then the second wave came on top of that, which was the war in Ukraine. So finally, these two waves are subsiding, and now we have oil prices back at 90. This started before the war in the Middle East, but this war could cause them to spike and go far above that. So if they remain above a certain level, then we could see a third wave of inflation. Later that's going to translate into overall prices, consumer behavior, and what have you.
George, you better explain how this higher oil price comes about, because obviously Israel isn't a producer of oil itself. It does have some gas assets, but it's not an oil producer.
Yeah, so it's not about Israel. It's rather about uncertainty, because look, the longer the conflict lasts, and that's what we learned in Ukraine, the more likely that other countries could be dragged in. They could be forced to act. They could cut supplies to show solidarity, and so on and so forth. Up until a few days ago, there was a lot of speculation about the deal between Israel and Saudi Arabia. This conflict now suggests that deal is probably not on the table anymore, and that deal was helping markets speculate that oil prices would come down from the 90s back into the 80s or the 70s.
Would the Saudis necessarily, though, want to get drawn into this, given that Hamas are being funded by the Iranians, the Saudis' old enemies?
Look, no, I'm pretty sure no one wants to get drawn into another Middle Eastern conflict. But how can they now make a deal with Israel and design the future of the region with an open war between Israelis and Palestinians? Okay, so something that was there is not there anymore already because of that conflict. And, you need to think a little bit wider as well. The world is very geopolitically unstable. And, as if it wasn't reminiscent of the 70s enough, now we have a war in the Middle East, just to make sure. So this unstable world, we won't be talking about just a third wave. We could be talking about a wave after that, a wave after that. Inflation is caused by inherent instability. Okay, and this is a world that's exponentially more unstable. We see more entropy into the system year after year. So this is the larger picture I'm looking at, and that's why I'm not just afraid of a third wave of inflation. If this continues, there could be a fourth and a fifth, and that's exactly what the 70s looked like.
OK, George, got to leave it there. Appreciate you joining me today. Thank you.
Thank you.
Now, grocery price inflation has fallen for the seventh consecutive month to hit its lowest rate for 15 months. That's according to the latest figures from the data and analytics firm Kantar, which says grocery price inflation in the 4 weeks to the 1st of October came in at 11%. That was the lowest since June last year. The price of some staples fell sharply during the period. Kantar highlighted that the average price paid for a 250-gram pack of butter is now 16 pence less than a year ago. Well, joining me now is Tom Steele. He's Kantar's Strategic Insight Director. Tom, welcome to you. Is this down to a decline in producer costs, or is it an intensification of competition among the supermarkets?
I think ultimately it will be a bit of both. So what we're seeing this month, as you'd alluded to, is the lowest level of inflation that we see in our grocery inflation read since June last year. So it's at 11% now. Last period, it was at 12.2%. So we're seeing it come down, although it's still coming down quite slowly. And obviously, you know, you referenced the example that we'd shared on butter. So that's 16 pence cheaper in actual terms, which is, you know, positive news, but obviously still a long way to go, and consumers will still want to seek out that further value. Further to that, in terms of what we are seeing retailers do to kind of help consumers, and ultimately will have an impact on the inflation rate that we are measuring, is we are seeing an increase in the level of promotions. So this month, we see just over a quarter of grocery food and drink spend come through some form of promotion. So the level sits at 26.5%. And over the last few months, it's really been own label lines that have been driving that. Interestingly, this month, we see an increase from brands. So potentially starting to see that response coming through from brands as well there.
Very interesting. 26% of all sales on promotion. I mean, Tesco and Sainsbury's both raised their market share during the months. Are they being more promotional than some of their competitors?
Certainly in terms of what we're seeing for Tesco, so they are one of the retailers that are driving that promotional change as well. Less so for Sainsbury's, but really across the board, and particularly when we look at branded, it's really coming from everywhere. So I think it's a genuine response as we're seeing brands trying to kind of eke out some of that share that has been lost to own label lines really over the cost of living crisis that we've had.
Tom, the one thing that really jumped out at me in the data was just how dreadful a performance Asda have been putting in right now. I mean, their overall market share has gone below 14%. I mean, that's got to be the first time in a couple of decades.
I'm not sure on the history of that one, but it has been a tough month for Asda. However, they've got some strong comparables from last year when they had launched a lot of initiatives such as Asda Rewards that they're lapping as well. So some of it is to be expected as well from them. But ultimately, what we're seeing is growth across the board from all retailers, but that continues to be backed by inflation and higher prices, which really are affecting everyone.
OK, Tom, got to leave it there. Appreciate you joining me today. Thank you.
Thank you.
Some other business news stories for you now. And the UK's economy will grow more slowly next year than any other in the G7 group of leading industrial economies, according to the latest forecasts from the International Monetary Fund. The IMF predicts the UK will grow by just 0.6% next year, compared with 1.2% in the Eurozone and 1.5% in the US. But critics are warning that the IMF forecast should be taken with a pinch of salt, as it's based on an expectation that the Bank of England will raise interest rates to 6%, whereas financial markets are betting that bank rate has already peaked at 5.25%. Country Garden, China's largest private property developer, warned today it could not meet all of its obligations and expected its financial situation to remain pressured due to a protracted slump in sales. The company today failed to meet a debt repayment of $60 million and reported that home sales had fallen for a sixth consecutive month. The developer, which is based in Foshan in southern Guangdong province, is yet to default on any of its debts. It's lined up advisors to help with what would be one of China's biggest ever debt restructurings. Shares of YouGov surged by more than 9% this morning after it reported a 63% rise in adjusted pre-tax profits to £56.4 million for the year to the end of July. The Research and Data Analytics Group, which recently announced plans to buy the consumer panel business of market research firm GfK, said it had benefited from increased spending by existing clients and by the launch of new products. It said the US remained its largest market, but due to disruption in the technology sector, it had seen some slowdown there. But in the UK, it performed well, despite the overall negative sentiment in the market. The recruitment firm Robert Walters said today that its fee income had fallen again for another quarter as economic uncertainty continues to weigh on hiring activity and on client and confidence levels. The company, whose founder Robert Walters stepped down earlier this year, said that net fee income in the 3 months to the end of September was down by 17% on the same period a year ago. In the UK, it was down by 13%. The company pointed out that the same period last year had seen it enjoy a record performance. The shares are actually ahead by 0.25% right now. And the electrical goods retailer Currys said today it has received a number of offers for Kotsovolos, its business in Greece and Cyprus. Currys launched a strategic review of the business, which is a market leader in its countries, in June this year. It said it and its advisors were now evaluating the offers. Kotsovolos, which was founded in 1950, has 2,600 employees working in its online operations and across 93 stores. Shares of Currys are currently up 3.75% on the news. Still to come here on Business Like, we're going to have a look at how the markets are doing.
Press preview, a first look at the front pages as they arrive.
There's a feeling amongst some commentators that it's not the most respectful timing.
I think there's a word for it, fake news.
I mean, it's wah, wah, wah from Harry.
Delving deeper into the stories with different perspectives on tomorrow's headlines.
We really haven't seen the government getting round the table and negotiating.
There are no easy answers to those questions.
The press preview delivering you tomorrow's news tonight on Sky News.
I'm Adam Parsons. I'm Sky's Europe correspondent based here in Brussels. More flares going off, a volley of rocks. Cobbles have been pulled up out and are being used as missiles to hurl at these police. We take you to the heart of stories that shape our world. We aim to be the best and most trusted place for news. We have now left Italy and entered France. Nobody's asked to check our identity. Made by people who dare to challenge. Nice to see you again, Mr. Barnier. Why? Meeting you. Fishing does have the potential to stymie an enormous economic deal. What strikes you when you come to this glacier is not just the way in which the environment is changing, but the speed at which those changes are happening.
It's devastating, actually.
Time now for a look at the markets then. Last night's gains on Wall Street following comments from a US Federal Reserve official that further interest rate rises may not be necessary were followed by a largely positive session for equities overnight in the Asia-Pacific region. The Nikkei in Tokyo enjoyed its best one-day gain in 9 months. Well, in Europe, stocks are all firmly trading to the upside this morning on those comments. All of the main indices in continental Europe 1.5% or more higher. Talking points in Europe today include Mercedes-Benz, the shares up there 1.5% in Frankfurt on the back of a trading update. Here in London, the FTSE 100 also in positive territory, currently 1.5% higher. The mining heavyweights are leading the way there. The specialty group, chemicals group Croda has attracted a few bargain hunters following yesterday's sell-off, which was on the back of a profit warning. A lot of brokers still keen on that one. Outside the FTSE, Greencore, the UK's biggest sandwich maker, has jumped by 15% on news that full-year results are going to be better than expected. While some stocks which did sell off heavily yesterday after recent events in Israel have rallied. They include the oil and gas company Energen, which is up 5%, and TUI, which is 4.5% better. On the foreign exchange markets, well, the US dollar has taken a pause for breath after those comments from the Fed's vice chairman. Pound up 0.25% against the dollar, more or less unchanged against the euro. The single currency likewise up 0.25% or so against the greenback. Meanwhile, the oil price has continued to, it's drifted this morning, to be honest. It remains lower, actually, than it was this time last week. Barrel of Brent crude will currently set you back 0.5% lower, $87.71 a barrel. With me this morning is John Wynne-Evans, Head of Investment Strategy at Investec. John, good to see you this morning. What was behind this reduction in bond yields overnight, do you feel?
Well, it seems largely to have been the comments that you mentioned from a couple of Federal Reserve members last night, effectively suggesting that, with the tightness they've already seen in monetary policy and the fact that recently the markets with higher bond yields as well is sort of doing a bit of the job for them, so they can now afford to at least pause at the next meeting. And obviously markets have jumped one step ahead of that and actually suggesting, right, that's it, the peak is in, and sometime in the next, couple of quarters, we can even start thinking about rates going down, but that may be a little bit premature, perhaps, at this point.
Of course, the US Treasury market was closed yesterday for Columbus Day. Presumably, volumes would have been fairly thin.
Volumes on the equity market were lower than normal. I think it was the second quietest trading day this year for a full session, so that gives you some idea. So it's probably a bit of a thin market over there as well yesterday.
Yeah. What about inflation in Europe? I mean, there's some data that's caught your eye there.
We've seen sort of inflation continue to track down in Europe. There was Norway and Denmark and the Netherlands this morning, I think, all had numbers that came a little bit lower than expected, and indeed in negative territory in the Netherlands at this particular point on a year-on-year basis, so that's progress. I think in Germany they were pretty much in line, but the thing is now the trend is definitely coming lower. There's no doubt the peaks are in for year-on-year inflation rates at this particular point, and that's got to be good news.
What about PepsiCo? There aren't many company results out today, but PepsiCo has just kicked off the Q3 trading updates. What did they say?
Yeah, well, they reported for the quarter $2.25 against an expected $2.15, so that's a good start. And at least so far, I haven't been able to find any mention about the potential of lower demand from these weight loss and appetite reduction drugs, the GLP-1s, that have been released recently, which apparently we saw some comments from Walmart last week suggesting that people are buying less kind of, calorie-full snack foods and soft drinks and that sort of thing. So I'm sure they'll be tested on that on their call later and ask specifically about it. But so far, I think the indication the shares are up a couple of percent in the pre-market. So, that's a good start to the reporting season in the US.
Yeah. Where do PepsiCo sit, though? Are they a staple product, their products, or are they things that you'd see varying demand for depending on the economic backdrop?
Well, they should be reasonably staple, I would have said. I mean, if you think crisps and snacks and fizzy drinks are your staples, then that's fine. I would have thought it's a reasonably steady stream of revenue, certainly. Yeah.
All right. Before I let you go, one-word answer: Wales's prospects at the weekend?
Good for the weekend. Probably a bit more difficult the weekend after. I'll be there, whatever happens.
Good to hear, John. Lovely to see you again. Thank you.
Thank you.
That's it from me. I'm back again at 4:30 with our afternoon edition. Hope very much to see you then. In the meantime, do stay tuned for all the latest on the events in Gaza and Israel. Thanks for joining me this morning. See you later.
Good. Thank you.